Are you newly registered under GST law or about to apply for GST registration? Have you just joined a tax team of a big organization and now worried about what you must do and not do when complying under GST? Then this essential checklist that I will be sharing in this video will help you stay 100% compliant under GST. Hello and welcome. I am Annapurna from Clear, India's largest tax and financial services platform. Team Clear serves more than 4 lakh growing businesses. Welcome back to our channel, and if you happen to be new here to Clear channel, then I have some exciting announcement for new subscribers. We have an exclusive gift for you. It's a GST compliance calendar that will help you stay 100% GST compliant without any stress. To claim it, subscribe to our channel and let us know in the form provided in the description below. Without further ado, let's check out the do's and don'ts if you are beginning with GST compliance. The first under the do's is to file your GST returns on time. There are various returns and forms to be filed or submitted under GST depending upon the type of taxpayer you are. The frequency of filing varies with the type of taxpayer you are and your annual turnover. An important tip that will help you avoid interest, late fee notices would be to ensure that all GST returns are filed within your respective due dates. On the other hand, the first in the list of don'ts is to pay tax under the wrong GST head. Taxpayers sometimes make the mistake of paying tax under wrong GST head or paying interest under the tax head different from the required one, and so on. You should be extra cautious when making GST payments, as the GST network does not allow you to utilize input tax credits between tax components if it's CGST and SGST. You will then have to apply for a refund, which takes time. Payments under the wrong tax heads would lead to unfavorable working capital conditions. The second one under the list of do's is to upload accurate data in GSTR1 return. There are a lot of fields to be filled up while filing the GSTR1 return by sellers. The GST network does not allow for revision of a return once it is filed. While this may cause hardship to you, a little caution at the time of data entry will ensure that no reconciliation rectification need to be done in the returns of later months. The second one on the list of don'ts is to categorize zero-rated supplies as nil-rated supplies and vice versa. This is a common error made by most of the taxpayers. Zero-rated supplies are export supplies and supplies made to an SEZ unit or developer, whereas nil-rated supplies are supplies on which the tax rate is 0%. The input tax credit cannot be claimed on a nil-rated supplies, and hence you should be careful while entering data in the GST returns. The third one under the list of do's is to maintain proper documentation of GST data. This is a requisite for any taxpayer. It is a healthy practice of maintaining proper records under GST. This could mean purchase and sales register, fixed asset register, payment challans, e-way bills, IRN of e-invoices, etc. To know more about this, you could see the article linked in the description below. In the event of a scrutiny or notices being received, or even at the time of closure of books of accounts, the reconciliation process will be much smoother if proper documentation is maintained. And on the other hand, third on the list of don'ts is to forget filing your nil returns. This is a very important aspect that taxpayers sometimes tend to ignore. If you do not have transactions for any particular period, you should not forget to file a nil GST return for that period. This would also enable smooth filing of subsequent returns, as the GST network does not allow returns to be filed in case past period returns have not been filed. Next on the list of do's is to reconcile your GST returns regularly with your books of accounts. This is a very important procedure that businesses need to be doing on a monthly basis or more regularly, and not wait until the end of the year to reconcile the returns in Form GSTR1, GSTR2B and GSTR3B filed with their books of accounts. The practice of timely reconciliation would enable identification of errors and omissions in input tax credit claims and sales. These can be amended in the return of a subsequent month rather than wait until the end of the year, and would thus save a lot of interest and penalties, if any. To know more about how to reconcile your returns with books, please watch the video linked in the description below. Fourth on the list of don'ts is to apply the wrong tax rates. Government issues notifications through CBIC regularly with the updated GST rates as recommended by the GST Council. All businesses need to stay updated with these rate changes and pay GST at the rates in force. There are also separate rates for certain goods and services that depend on whether input tax credit is claimed or not. Persons issuing GST invoices should ensure that the correct tax rate is charged whenever an invoice is being issued. Fifth in the list of do's is to reconcile e-way bills issued with the invoice details declared in GSTR1. If you deal in goods, then the e-way bill becomes a necessary compliance. Taxpayers should match the e-way bills that is issued with the data reported in GSTR1. This could be one of the causes of notices being issued to taxpayers in the event data does not match. The non-reconciliation of e-way bills data with the GST returns would also cause hardships at the time of GST audit and preparation of GST annual returns. The fifth on the list of don'ts is to pay tax if it is to be paid under reverse charge by your buyer. This is for all businesses who issue sales invoices where GST is to be paid on a reverse charge by the buyer. Such businesses need to identify if GST needs to be paid by the recipient on a reverse charge basis, and as a seller should not charge GST when issuing that invoice. This can save double payment of tax and unnecessary hardship of depositing tax when the liability instead lies with the recipient. Let me pause here to let you know that Team Clear provides cloud-based solution that will help your business be 100% GST compliant. Do check out the link in the video description to explore. Type in clear in the comments if you find my explanation crystal clear. Also, we'll take up your queries on this subject, so feel free to post them in the comments. Moving on, sixth on the list of do's is comparison and reconciliation between GST returns. A very beneficial exercise to taxpayers is matching data between returns, which will help in the process of filing annual GST returns. Taxpayers should compare their GSTR3B returns filed with GSTR2A or 2B and GSTR1 and ensure that all data matches. Sixth on the list of don'ts is to forget paying tax on goods sent on job work after expiry of specified period. If you have given goods for slitting, machining, welding, painting, electroplating, assembling, powder coating, etc., it is a case of job work. In the case of job work, principal manufacturer is liable to pay tax along with applicable interest in case of goods being sent on job work and are not returned within the specified time period, which is 1 year in case of inputs and 3 years in case of capital goods. In case of molds and dies, jigs and fixtures, when disposed of as scrap, tax is supposed to be paid by job worker or by the principal manufacturer in case job worker does not have a GST registration. Seventh on the list of do's is to correct and amend your returns before filing the annual GST return. GST return filers should ensure that all pending amendments have been made to the monthly returns in subsequent months' returns on a timely basis. If this procedure is not carried out, it could lead to a difference between the returns filed during the year and the annual GST returns. Hence, all reconciliations should be carried out and any discrepancy should be rectified by the September 2021 GSTR1 and GSTR3B returns before the annual GST return in Form GSTR9 for FY 2020-21 is filed. We have many videos on annual returns in Form GSTR 9 on this channel. Feel free to explore our videos if you'd like to deep dive. On the other hand, the seventh one on the list of don'ts is to claim ineligible input tax credit and more than 5% of ITC given in GSTR 2B provisionally. The input tax credit is the tax paid on raw materials or services you purchased for business, which can be set off against tax payable on products sold by you. There are certain cases where input tax credit cannot be availed, such as the payments not made to suppliers within 180 days, inputs used partly for personal purposes, capital goods sold, free samples given away to customers or business partners, and goods destroyed, etc. You need to stay updated with GST provisions related to input tax credit. Any wrongful availing of input tax credit could lead to notice being issued by GST department. So friends, now that you know the checklist to stay 100% GST compliant, make sure to save this video. Clear GST software helps you not only with accurate and faster GST return filing, but also reconciles and matches huge invoice data across tax periods between books and returns. Check out the link in the description of this video to explore. If you find the video helpful, please support us by subscribing to our channel, and don't forget to fill the form given in the video description to win your gift. Thank you.